You're welcome back. We want to examine confidentiality and conflicts of interest. We're still looking at ethics, okay, rules of professional conduct, and confidentiality is also a key aspect. Conflict of interest to also always come in. The basic principle, we said the ICAN code of conduct applies IFA's code of ethics regarding confidentiality. Alright, that is information obtained in the course of professional work should not be disclosed to others or used unless disclosure is permitted by law and consent has been obtained from the party to whom the duty of confidentiality is owed, or disclosure is required by law, or there is a professional duty or right to disclose when not prohibited by law. Alright, so that is it. You cannot just disclose unless there is a requirement by law, or that you have a professional duty to disclose, like the case of money laundering, like we mentioned. So recognize exception to the duty of confidentiality. Disclosure permitted by law and authorized by the client or employer. For example, when an auditor is asked to report to a bank in relation to comply with a loan covenant, the auditor will seek the client's authorization before disclosing confidential information to the bank. Okay, so in such a situation, the disclosure is authorized by the client. Okay, it's authorized by the client. Okay, when an auditor is asked to report to a listing authority, stock exchange, in relation to listing rules, again the auditor will seek the client's authorization before disclosing confidential information to the listing authority. So that one is not disclosure by law; it's disclosure by the authorized by the client. All right, and sometimes when disclosure will be required by law. Okay, an ICAN member may be required by law to disclose confidential information to an appropriate legal authority. In such circumstances, the requirement of the law override the duty of confidentiality. All right. For example, when you are required to produce documents in the course of legal proceedings, all right, disclosure to the appropriate public authorities of infringement of the law that come to light. Okay. For example, money laundering, which we have talked about. The Money Laundering Prohibition Act of 2011 requires an accountant to report mere suspicion of money laundering, even if those suspicions ultimately turn out to be false. The accountant remains protected by law from being sued by the client. Okay, there is professional duty or right to disclose when not prohibited by law. Okay, for example, to comply with the quality review of a member body or professional body, you have to disclose. To respond to an inquiry or investigation by a member body or regulatory body like ICAN, you have to disclose. To protect the professional interests of a chartered accountant in legal proceedings, somebody is suing you. Want to defend yourself, you have to disclose. To comply with technical standards and ethics requirements or other situations not covered above. These are other situations whereby the auditor can disclose confidential information. Other considerations in deciding whether or not to disclose confidential information, chartered accountants should consider the following: whether the interests of all parties, including third parties whose interests may be affected, could be harmed if the client or employer consents to disclosure of the information by the chartered accountant. All right. Remember, we talk about public interest. So there are other stakeholders, even apart from your client. Alright, whether all the relevant information is known and substantiated to the extent that it is practicable. When the situation involves unsubstantiated facts, incomplete information or unsubstantiated conclusions, professional judgment should be used in determining the type of disclosure to be made, if any. So when you don't have your facts, alright, you don't just go and just start blabbing. Alright, the type of communication that is expected and to whom it is addressed in particular. Chartered accountants should be satisfied that the parties to whom the communication is addressed are appropriate recipients. Okay, so you don't give confidential information to wrong set of people. Okay, improper use of information. An ICAN member should not use or appear to use confidential information in the course of professional work for his personal advantage or for the advantage of a third party. I've talked about insider trading, where an auditor may use information he has gotten to either buy or dispose shares or sell that information to a trader on the stock exchange, such will be arrested and prosecuted. Alright. A member should not deal in the shares of a client company in such a way that it might seem the information obtained in a professional capacity has been used for his personal advantage. Alright. We have a member has confidential information for client 1, which affect an assurance report on client 2. He cannot provide an opinion on client 2 that he already knows from this other source to be untrue. If the member is to continue as auditor to client 2, he must carry out normal audit procedure to enable the same information to be obtained from another source. Under no circumstances should there be any disclosure of confidential information outside the firm. Alright. Ultimately, the auditor may have to resign if the situation is becoming too hot for him to handle. Confidentiality of working papers is very, very important that you keep your working papers. Of course, the working papers are the properties of the accountant, okay, and should not normally be made available to outside parties. But situation may arise that government agencies like tax authorities, alright, Nigeria FRC, Financial Reporting Council, alright, may ask to see the accountant's working paper relating to a particular client. In such a situation, the accountant should act in the best interest of his client. If he feels that the releasing paper is in the best interest of the client, and the client has no objections, then the paper should be made available. Ultimately, tax authorities are likely to have legislative power to obtain the papers. Any lack of cooperation on behalf of the auditor or his client may add to any existing suspicions. Alright, occasionally, the authorities may ask to see a sample working papers from a firm of accountant, but not in relation to any particular client. Maybe they just want to know how things, the quality control system in that auditing firm. This may occur where the authorities have doubts about the quality of work performed by that practice. Okay, again, the best interest approach should be adopted, allowing the authority to review the papers if the accountant judges that this is in the best interest of the practice and his client. An appropriate practical compromise may be achieved in this situation by arranging for an independent accountant to review the work and issue a report to the authorities. Conflict of interest between members and clients should be avoided. Alright, you should not accept or continue an agreement where there is a conflict of interest between the member of firm and his client. This is not allowed. For example, when members compete directly with a client in the same line of business, alright, the receipt of commission from a third party for the introduction of a client, we have said it, is not allowed. Okay, safeguard, identify possible conflict of interest situations, evaluate the problem, where necessary take actions to manage or avoid the conflict. For example, you can review relationship with all clients on regular basis to ensure that conflict of interest have not emerged. Take care to consider potential conflict of interest when deciding whether or not to take on new clients. Alright, if a potential conflict is identified, decide on an appropriate course of action. Alright, then notify the clients involved and discuss the matter with them. What about conflicts between competing clients, whereby, for example, let's assume you are the auditor of MTN and you are the auditor of Glo at the same time? How do you manage it? Okay, because there could be issues. MTN may not trust you, Glo may not trust you, because there could be information leakage from the auditing staff. No, confidential information of MTN could be passed to Glo and vice versa. So there's a lot of issues to that. So in a situation like that, what are the safeguard? You may decide not to take two competing clients as a safeguard, and if you want to take two competing clients, you have to disclose to those charged with governance at both entity A and B. Let them know that, look, I'm the auditor of A, I'm also the auditor of B, so that they know what is on the ground. Then also you can also create what we call Chinese walls between the auditing team of A, alright, and auditing team of B. So the team for A is different from team for B. In fact, where they keep their auditing file is far different, and you don't allow communications between team A and B as regards what they have, their discoveries in client A and client B. These are the safeguards to manage issues of conflicts between competing clients. Okay. What about the issue of corporate financial advice? Okay. I know many auditing firms has units they call, like for example, some of them will call it advisory services. Okay, business advisory services. So many of them have departments like that. Okay, so certain type of corporate finance services may create such significant advocacy and self-revealed threat that the work should not be taken on. Okay, telling the management we have to invest. For example, it could create problems if it didn't work, or you're advising them on the best corporate structure they are supposed to have. All these things could create risk in whereby you may discover that you are actually taking management decision for the organization. Okay, assurance firm should not promote, deal in, or underwrite an assurance client shares. Okay, they should not commit an assurance client to the terms of a transaction or complete a transaction or an assurance on an assurance client behalf. So don't take management role. Okay, when you are preferring corporate financial advice, advising clients involved in takeover bids or share issues, auditors are often asked to give advice. However, where clients are involved in a contested takeover bid, auditors could find themselves in a position where they are potentially active for both parties. Okay, so the companies will be taking over according for your attention, for your advice. People that are going to take over according for your advice, so you have a conflict of interest. There's a danger that the firm cannot give objective professional advice in the best interest of both parties. Obviously, okay, they are going to lean towards one more than the other. The firm may be in possession of a confidential information relating to each party, with a risk that the information may inadvertently become available to the other party. So the other firm may be tempted to sell out those information. Okay, guidelines in this area are as follows. There is no reason in principle why a firm should not act for both parties when a contested takeover bid occurs. However, a firm should not be the sole or main advisor to both parties. If the accountants are in possession of material confidential information and feel that their position in this request is questionable, they should take advice from the appropriate financial regulatory authority. For example, the stock exchange involved, or national regulator of the financial market. Similar conflict of interest may arise in connection with issues of shares to the public, because the accountant may be advising both the company issuing the shares and potential investors, such as companies interested in buying the shares. So, conflict of interest will definitely arise in a situation like that. So, you have to be very, very careful as an auditor when it comes to advising companies on issuing of shares, buying of shares. So we are saying that it's important that the accountant will not be the sole person or sole body giving advice, so that there could be checks and balances.